Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live. Thank you for those that are following us on Facebook and social media. We appreciate that very much. We do the podcast, if we can, about 3 days a week, Tuesday, Wednesdays, Thursdays. Hopefully those continue to tune in. And also, remember, this is a podcast, which means we do record in our studio here and do the video portion of it and post it on social media as well. But it is a podcast, so the audio portion gets distributed every single evening usually. For more information, you could go to RERL-1706-The. That's RERL-1706-The, and any other places you can get it. Apple, Stitcher, just go anywhere online and enter Real Estate Radio Live. You'll be able to find the podcast and download it. We have thousands of downloads each month. We appreciate that very much. We've been doing the show here now for roughly 8 years, live radio for the first 6 or 7, and the podcast continues to grow. And the focus is education and information. That's what we do. We try to provide the consumer with as much education and information as you can around real estate to help you make wise decisions, whether you're buying, selling, financing, anything really around the real estate area. Before we get started, today's show is brought to you by Bundle Select, bundleselect.com. Find out why over 6 million employees now have signed up to use bundleselect.com, and that includes companies like Adobe, Salesforce, Visa, El Camino Hospital. I could go on and on. Again, over 6 million employees have signed up to use Bundle Select. It is an employee benefit for corporations. For more information, if you are an employee and you'd love to see this benefit within your company, have your HR or benefits people go to bundleselect.com. If you're in the HR or benefits business, again, go to bundleselect.com. You can find out more information. It is growing like crazy. Really what it is in general is a benefit, a real estate and lending benefit for employees. Just as valuable as health care, 401k, medical, dental, any of that. It's a wonderful savings. Employees are signing up left and right. We'll have a lot of success. Again, for more information, go to bundleselect.com. Today I'm going to try to clear up the craziness that's going on in the market. And most people, you may not see it or you may not be in tune to it unless, A, you own a property, you own a home, and you're looking at lowering your interest rate and refinancing, because refinance rates, as of a week or so ago, were at the all-time low in the history of tracking interest rates. And so if you're one of these people, which is, should be 90% of the marketplace if you own a home, you should be looking at the refinancing your mortgage in the last week or so or more, because you want to take advantage of these savings and lock in rates in the crazy low 3% range, and sometimes the 15 years were even in the 2% range just a week or so ago, recently up until a couple of days ago, to take advantage. So if you own a home, whether it's a primary residence, second home, rental property, obviously, or if you're in the market for a purchase, you're keeping an eye on this as well. However, in the last couple of days, there's been a dynamic that's taken place, specifically really in the last 48 hours, that I want to address, and I want to educate people and hopefully bring some clarity what's happening in the marketplace right now, because if you don't understand it, it's quite bizarre. So I'll try to simplify this as much as I can. I've been in this business for over 20 years, the mortgage lending business. So typically, here's what happens. In general, when the economy's struggling, when the market's struggling, when there's some kind of economic uncertainty, unrest, if there's potential war, if there's potential issues, if anything's happening in the economy that kind of spooks the economy, typically what happens is you have kind of what the investors call a flight to safety. What does that mean? Most people then will start moving their money out of the stock market, which is more of aggressive returns over the years, and they'll move it into safe investments. And some of those safe investments are treasuries and bonds, and which are tied to mortgage interest rates. So what happens in general, to try to simplify this as much as I can, as easy as I can, so a person can understand it, usually when we have a struggle in the economy, that will drive interest rates down for those reasons. Well, most of you know the coronavirus and some of these other issues that's coming up have had a tremendous strain on the stock market and the economy and the concerns. So over the last couple of weeks or 30 days, you've seen the stock market tumble. It's been very volatile. So what that has equated to is the long-term mortgage rates have improved drastically. So in the last couple of weeks, you had interest rates down in the low 3% range for 30-year money, down in the 2% range for 15-year money. And it's been incredible. People started taking advantage of it, as they should. But because this is a phenomenon, kind of it's a one-time thing, it hasn't happened like this in a while. In the last couple of days, all of a sudden, even though the rate should be at historic lows, and you could argue that the interest rate should be in the 2% range. You really could if you look at the 10-year yield and what's happening in the investment world. Interest rates, 30-year rates, really in theory should be down in the high 2% range. So in the last 48 hours, we've had this dynamic where rates went up, and they went up by like 0.5%. And most people are standing around scratching their head, and they're talking, and they're trying to figure out what is going on here. So if you don't really understand the dynamics behind the scene and what's happening in the market, and as it really concerns the interest rates and the mortgage-backed securities and the lenders, it's mystifying. It's confusing. It's frustrating. And for some people that worked hard to get all their paperwork in and all of a sudden to find out that rates just shot back up, it's crazy because it shouldn't be that way. So the simple way to describe this is, number one, rates should still be super low in the low 3s, and you could argue maybe in the high 2s. So why did they shoot up so high in the last 48 hours? Here's why. And it's frustrating, and I'm not sure if there's an easy answer to it, but I just want to make sure that, as usual, I always provide my listeners, the people that listen and follow my podcast, with the truth and what's going on in the marketplace. The truth is this, and a lot of people don't want to hear it, and this includes major lenders, Wells Fargo, B of A, Chase, Citi, U.S. Bank. I could go on all the major lenders that you see. Here's what they're doing, ladies and gentlemen. They have falsely raised the interest rates. And you might say, why did they do that when the market didn't detect it? They're raising the interest rates because they can't handle the volume. Isn't that crazy? They're raising the interest rates because they cannot handle the volume of interest in refinancing and people flooding the market to try to improve the money on their mortgages. It's crazy. Now, some people would say, well, Joe, it's a one-time phenomena. This is the way it is. But here's the frustrating part to me. And remember, I'm in this industry for 20 years, so I'm very intimate, and I understand this industry very well. And it's still frustrating to me, but I call it the way it is. I always have on this show, and I'll continue to do that. And it's bullshit. It makes no sense at all, and here's why. There's other alternatives. You could allow people to come in and just be honest with them and say, hey, listen, we're going to give you this all-time low interest rate, but it's going to take us 3 months to close your loan. Okay, well, at least you know, and at least you lock in an interest rate and you know. Or, we can't lock your interest rate until you get the entire package, pull your credit, order your appraisal, and then we'll lock your interest rate. But we can't do that because we can't afford the fact that you might not come in, leave. We can't lock the rate. In other words, there are ways to get around this. There are ways to get around this to allow people to benefit from these all-time low interest rates. So what do? They can't handle their own jobs. They can't handle their own capacity. They can't operate their own companies efficiently. And so they artificially raise the interest rates and stop the flow of activity coming in. This is frustrating. This has got to be affecting, and I'm not kidding here, this has got to be affecting, I would think, all kidding aside, 30, 40 million people in the United States right now, I would think. I'm just guessing, but I think. The reason why I know this is that if you have a mortgage on any property, whether it's a primary residence, second home, or investment property, it doesn't matter. A few weeks ago, 90%, and these are not my guesses, these are statistics. As of 2 weeks ago, the rates were so low that 90% of homeowners could benefit from a refinance. Think about that. I don't know the numbers, but I can tell you it's in the 100 million plus mark, several hundred million people that own homes in the United States. So it's on hold. So the next question is, so what do you do about this? And this is what I want to talk about today too. So you understand, the important part is you understand a little bit of history behind it, where we are today, what happened, why it happened, and you understand that the lenders are artificially raising interest rates to stop the flow of business. Isn't that crazy? Most people would say, are you nuts? Take an opportunity. And I would agree. I'm doing that in my business. We've got hundreds of people over the last couple of weeks that we're working with to help. And so the message is today, I want to help those people. So those people out there listening to this podcast, come to me. Let us help you. Our team will help you. We're going to get your file prepped. We're going to bring it in. If the rates aren't where they are now, we're going to be ready to pull the trigger when they are. And we have a different strategy. We're going to help everyone. Even if it takes a little bit longer, we're going to help everyone. The major banks, again, Wells Fargo, B of A, Citi, Chase, U.S. Bank, I could go on and on. A lot of the major, they're shutting down. I don't mean literally shutting down, but they're raising interest rates so high that when you call or you go online or you find out, you're thinking, what in the world? 4.5%? Are you kidding me? My neighbor, my coworker, just got 3.25% 2 weeks ago. Well, that's true. And in some cases, the lenders are charging 4 to 4.5% for money. So here's my message. And please pass this podcast along. If it doesn't apply to you, pass it along to coworkers, friends, family members, anything like that, so they could help anyone. Here's my message. Don't do it. Wait. I really do believe that this will settle down over the next... Now, it could take a couple of weeks, could take 30 days, I don't know. But somewhere in the next 2 to 4 weeks, I believe this, that rates will be back down at all-time lows. So what I'm going to encourage people to do is don't get upset. Don't feel like you missed the boat. I really don't think you missed the boat. I really don't. Believe me, we've locked and secured hundreds of people in low interest rates over the last 30 days, and I believe we'll continue to do that. We have hundreds of applications that are coming in. The people that we weren't able to lock in the last 48 hours, we will hold on to. We will communicate with them, and we'll let them know when we can do this. But this is important to know, number one, why it happened and what's the next thing to do. So if you're working with someone, and I'm telling you right now, the thing that you have to be careful with, if you have your application in with Chase, B of A, Wells, any of the big lenders, I don't mean to concern you, but I am going to concern you here. I would pull that application and take it somewhere else, and here's the reason why. They're going to be the last ones that are going to lower their interest rates down again anytime soon. Companies like ours, New American Funding, large mortgage banking operations that fund on our own money, we service the loans, we keep the loans. Companies like ours have more flexibility because we have access to all the investors out there in the marketplace. And we're not a publicly traded company, so we don't have to beat to the drum of that. I would tell you that be very careful of right now, over the next 60 to 90 days, I would stay away from the large lenders, Wells Fargo, B of A, Chase, Citi. I'd stay away from them because what they're going to continue to do is artificially raise these interest rates on you. And so most people might say, well, Joe, I'm not going to even waste my time, and I agree with you. If you have an interest rate of 4% now or 3.875%, and you can't get 3.25% or 3 3/8, then I agree with you. No, absolutely you don't want to do this. So I hope that most of you feel that hopefully you did not miss the boat and you did not miss the opportunity here. I don't think you did. You have. I really don't. I believe that when I follow the market every day, that's why I do this show. My belief is this. Over the next 2 to 4 weeks sometime when things kind of settle down a little bit and the funnels open up a little bit with these lenders, I do think the rates are going to come back down. I really believe that. So here's what I want to encourage you all to do. If you have your file in with someone that you trust, then keep it there and have them keep an eye on it and let you know what the rates are doing. Because believe me, when the rates come down, it may not stay there for a long time. It may be a short period of time. You want to take advantage of it. So if you have your documentation, your paperwork in, you're improved, make sure you stay in communication with your lender to make sure everything's in place so that when the rates do come back down, you could lock in and you could take advantage of that. If you haven't, and you think you could take advantage, and I'll just give a quick summary to people so you know. You might say, Joe, who is eligible or who might be able to benefit from something like this? I'll make it as simple as I can. So if you have an interest rate of, let's call it 3 3/4, 3.75 or higher, 3.75 or higher, you could probably benefit from a refinance when those rates are at all-time lows, because when they're at all-time lows, they're at about 3 1/4, and that's a huge savings, a 0.5% in rate. Also, remember the 15-year is down in the 2% when it was at all-time lows. Also, people that have 30-year fixed, and you've been in this loan for, say, 5, 10, 15 years, you might want to recast and refinance down to a 20-year or 15-year, something like that would be a smart move. If you're moving from your home in the next couple of years, you're not going to own it. You may want to look at an ARM. What the ARMs are, adjustable rate mortgages, those will take the interest rates down even lower, and you could save money over a period of time if you're going to sell your home. No use having a high interest rate on a 30-year loan if you're going to only own your home for the next couple of years. So that's the plan of action. That's the thing to do. It's also a great time to purchase. If you're out there, you need help with pre-approvals, let us know. Give us a call. So that's the course of action. This is the reason why. I'm sorry it's happened. It's too bad it's happened. It's affecting millions of people. But the message is that I wanted to get out to you right away. I think we're going to be back in good place, so don't worry about that. Check with me if you have any questions. You know how to reach me, 408-838-9060. Or you can always email Joe at RERadiolive.com. Thanks again for tuning in today, and have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.